All right, fam. Welcome to Electron FX. Right. Today we'll be talking about divergence trading. Right. This is a very confusing concept sometimes, and you need to know how to use divergence to add to your trading, because a divergence kind of lets you know what is going to happen next. It's a technique which traders use to determine what will happen next in the market. Right. Divergence trading helps to tell you if the market is likely going to reverse or likely going to continue. So if you want to take a trade, you want to know if the trend is going to continue being bullish, right? Maybe the market is buying. You want to know if this market will continue buying or if it's going to break structure and start selling. So divergence helps you to know what the future holds for the market, right? So that is the idea of divergence. It helps you to know what to expect in the market by the simple thing I'm showing you now. Now, what is a divergence? A divergence is simply a difference between the structure of the market as shown on the chart and the structure of the market as shown on the indicator, right? That is the divergence. The difference between the structure of the market as shown on the chart and the structure of the market as shown on the indicators. And there are several indicators for checking divergence. There are basically two I recommend. You can use the MACD. That is the you can use the MACD. You can use the MACD for checking your divergence. So the MACD, you can use it to check your divergence, or you can use the relative strength index. So this is what I use most often, the relative strength index, right? And I put my distance to 6, RSI 6, right? That's what I use to check my divergence, right? You can use the MACD or whatever you want. Some people use the stochastics, but I prefer the relative strength index, right? So now, how do you use this idea, right? Now, when the market is bullish, right? This is when the market is buying. The market is buying up. And okay, if you draw a trend line, right, like this, if you draw a trend line like this, right, this is how to draw it, the trend line, sorry. This is a trend line. You draw it across the highs, all right? So this is a clear picture of a bullish market. Now, when we have a divergence, we will see something like this on the RSI 6. So the market doing this. So the market doing something like this. So the market doing this, creating a series of lower highs and lower low. Or let me not do that all over. So the market doing something like this on your indicator. Instead of buying, see the market doing this on your indicator, right? You're seeing this on your indicator, right? And if you draw your trend line, right, across it, you're seeing this on your other side. Yeah, you see something like that here, right? So let me just draw a line. Now the market is maybe is buying. Instead of seeing a bullish short of it, see the market doing this on your indicator. So that is a divergence. The difference between the structure as shown on the chart and the structure as shown on the indicator. That is your RSI, right? So now, that is the idea behind divergence. The difference between the structure as shown on the chart and the structure as shown on the indicator, right? The structural points, right? So this is the divergence. Now we have 4 basic kinds of divergence. We have the regular bullish, regular bearish, hidden bullish, and hidden bearish. Now I want to say something to make it very easy. The regular divergence are used to spot reversals in the market. Yes, reversals, right? For regular bearish, the market is buying and you're expecting the market to sell. That's what it's used for. Why the hidden bullish and the hidden bearish are used for continuation of the trend, right? The regular is used for reversal of the trend, while the hidden is used to spot the continuation of the trend. That is the difference between them. So regular means reversal, hidden means continue. That is very simple. Continue, reversal, right? So let us go into details. Just let me start with the regular bearish divergence, right? So what does it look like? the market is bullish on the market. This is the market chart. The market is bullish, creating a series of higher highs and higher lows, higher highs and higher lows. If you draw a trend line, extend it, whatever, this is what it looks like. And then on your indicator, you're seeing the market doing something like this. Right, this is a regular bearish divergence. So you see the market doing this. We'll check the chart for this later on. So see the market doing something like this. The same thing here. So this is a regular bearish divergence. A regular is a reversal. So the way you see this on your indicator, it tells that this market is likely going to sell down. So you're looking out for a break of structure the time on the lower time frames, and then you enter and sell down. So that is how to know a regular bearish divergence. It's used to know a reversal. The market is buying and you're expecting that reversal. So you see this on the market doing something like this. Instead of making a series of higher highs and higher lows, you're seeing a sharp difference. So this is a regular bearish divergence. It tells that the market is going to reverse from being bullish to becoming bearish. Right now, if you want to talk about okay, this is a regular bearish divergence, right? It tells you about the reversal. So let's talk about the regular bullish. Let's talk about the regular bullish. Let's talk about the regular bullish. Let's talk about the regular bullish divergence. Let's talk about the regular bullish divergence. Regular bullish. Right. So this is the regular bullish divergence. I'll have to remove this because this is not a regular bullish divergence. I'll have to remove this. I have to remove this and this and this. Right. So remember that the regular divergence are used for spotting reversals. Right. So now this is what the regular bullish divergence looks like. The market is bearish on the market charts. You see the market making a series of lower highs and lower lows, lower highs and lower lows, and so on and so forth. And then if you draw your trend line, the market is doing something like this. So this is sharp. This is a bearish market. If you draw your trend line, right? So use a trend line to spot this. So this is a regular bullish divergence. No, sorry, use the lows, not the highs. Use the lows, right? So see the market doing this. This is making sense of lower highs and lower lows. So when you want to spot this, you're expecting the market to do something like this. Remember, the market is bearish, all right? Bearish, and then you see something like this on your RSI. So now, if you look at this, you will see that there is a sharp difference in this. So look at this. You're seeing this, right? You're seeing this, right? Let's bring this down a bit. You're seeing something like this, right? So look at it. You're seeing this. The market is making is pushing up instead of looking like this, making series of lower lows, lower lows, lower lows. But you're seeing the market doing lower low, lower high. So this is a regular bullish divergence, and this is telling that this market is going to buy up, right? So telling that the market is going to reverse from being bearish to becoming bullish. So that is the idea behind regular bullish divergence and regular bearish divergence. They are just used to show reversals. Regular bearish, the market is going to reverse and start selling because you're seeing the market making a series of lower highs on the oscillator on the indicator. Why on the regular bullish, the indicator is doing something different, telling that this market is going to buy, is going to buy. So you're expecting to buy the market from here, right? I want to say is that if you have not subscribed to the channel, do well to hit the subscribe button. Just hit the subscribe button if you haven't subscribed to this channel. Like our video, share the video. If this video is helpful to you, like it, subscribe, and do all those things just to encourage us, because the more you participate with us is the more we will post videos. We'll feel encouraged to post more and more so you can learn. Right now, let us go into the hidden divergence. The hidden divergence, right? Let's clone this. Let's clone this. Want to know what a hidden divergence looks like, right? Now, this is a hidden divergence, a hidden bullish divergence. Right. Now, on a hidden bullish divergence, let's extend this. This is for hidden bullish divergence now. So on a hidden bullish divergence, it shows continuation, like I said, not a reversal. Hidden divergence shows continuation. Now, the market is the market is right now. The market is this for a regular bullish now. And the market is making what a series of higher highs. Remember, this is a bullish divergence. The market is doing this, doing this, doing this, and this is a bullish setup. Now, they how to spot this. Sorry, how to spot this. Now, this market is bullish, as you can see. Market is making a series of higher highs, higher lows, and all of that. Now, if you draw your trend line, this is how to spot a hidden bullish divergence. This is the market. Market is making a series of higher highs and higher lows. This is for hidden bullish divergence. Now, if you want to see that hidden bullish divergence, you want to see the market do this. This is still being bullish. It's still being bullish. And you see something like this on the indicator. Can you see this? Right. So look at this. You're seeing the market doing this. See the market doing this on the indicator. Remember that this market is bullish. It's making a series of higher highs, higher highs, higher highs, higher low, higher high, higher low. This is the chart. This is cleanly bullish, higher high, higher low, higher high, higher low. But on your indicator, the market is making higher high, higher low, higher high. You're seeing a shift. Instead of this low to be above this low, you're seeing that it's below this low. So what this is telling that this market is going to continue upwards, right? So once you see this, expect the market to buy up. It's a continuation. Telling that this market is going to buy. This is the indicator. It's giving you this sharp difference at the lows. So it's telling that this market is going to buy. And you often see this in retracement. When the market has retraced down, you now start seeing this kind of thing. So I've seen the market looking like this on your indicator. You're seeing this. It's like this market is going to buy all the way up, right? So that is the same case for the hidden bearish. There's the same concept. The same concept, the same concept, the same concept, the hidden bearish, right? The hidden bearish is still the same concept, right? So the hidden bearish divergence is also in the same like fashion, right? So this for regular bullish, all right? This for regular, this for hidden bullish, sorry. So let us do hidden bearish, right? I will still label this again. My screen is almost filled. I will have to remove something. I have to remove something. So let us just leave this one here as a regular bullish. I will just do something by the side to make it different. So this is a regular bullish divergence. Let's not alter anything here. So this is a regular bullish, hidden bullish divergence. So what am I saying? This is the hidden bullish. All right. So well, let us just go and add one to make it okay. All right, so let's copy this out. I don't want to type this all over again. Control C, copy it, and let's just, I want to paste it close so that it will be easy for you to understand the difference. So I'm putting them kind of close. I want you to understand this easily. All right, so let's move it. Let us shift it. Let us shift it so that there will be space. Let's shift this. Okay. Let's just shift it. Right. Our mentorship program is still ongoing. If you want to register for our mentorship program, do well to hit the link at the description page. It goes only for $60 only. $60 only for our mentorship program. We'll teach you everything you need to know about trading from the beginning to the end. From the start to the bottom, we'll take you through smart money, all of that. Now, let us just finish this up so that we can wrap up for today. So this is a hidden bearish now. Okay. My keyboard is actually bad, so that's permitting me to just add A. Okay, my keyboard is messing up for a while now. Okay. right? Regular bearish divergence, hidden bearish, sorry. Now, for the hidden bearish divergence, right, you should know what is happening. The market is going to continue selling. That's what you should know about it. Now, remember the market in a bearish structure, we have what we call lower highs and lower lows, lower high, lower low, lower high, lower low, and all of that, right? So if you draw your trend line on this chart, you draw your trend line here, you see something like this on your chart. And if you go to the oscillator or the relative strength indicator, you see the market doing something. Okay, sorry. You don't use the, okay, yes, oh yeah, that's right. So the market will do something like this. The market is bearish, right? You see the market doing something like this. And you see this high, higher than this high, and then it's going down. So this is it about sorry, this place is kind of compacted. So I'll shift this up a bit. I'll move this up so that I want you to just have the picture of all this, right? So I'm doing this, sorry. All right. So on your oscillator, you see the market do this. Do something like this. You see this difference, right? The market should look like this because it's a bearish market, right? So the market should be sloping downwards. But then instead of sloping downwards, you're seeing the oscillator doing something like this. You're seeing a sharp difference between this low and this low on your indicator. So this is telling that this market is going to continue selling down, right? Hidden divergence, there's a continuation. Tell that this market is going to continue selling downwards, right? So that is the idea behind divergences. This is the idea behind divergences. So I want to use read charts to see if I can spot one or two of all these things, and then we wrap it up for the day. I just want to spot maybe one or two divergences, and then we close for the day, right? I have already explained all this. Just take a screenshot, go back to the video and revisit it if you have to, because you can't learn this one at just one sitting, right? So this is loading up. It's loading up, right? Okay, this is this. Okay, this Euro USD chart is a Euro USD chart. This is Euro USD chart. So let me install my indicator, my relative strength indicator. All right, let me make that 6. I don't like using 14. RSI 6. Okay. Now let me come to the smaller time frame, such as a 2 hour. I don't want to use a bigger time frame so that I will see it clearly. All right, so I want to look for divergences now. All right, I want to look for divergences now. Let's look for divergences. All right, now let me zoom this in a bit. Okay. All right, so this market was bullish. All right, this market was bullish up to this point. Now, if I draw my trend line, you can see that the market was kind of still bullish. You can see this. Now, if you look at this place, go down to see what happened. Look at what happened there. Can you see this? Can you see this? Can you see what happened here? Just look at this. You have to use some kind of tool to know, like you have to do something like this. So you get the exact, so you get the exact point to use. So this is it down here. So you're looking at only this spot down to this point, right? So can you see this? Can you see it? So this is a regular bearish divergence showing what? A reversal, right? So if you, let me remove this too. Let me remove that too. Let me remove that too. All right. Remove. Now, can you see this? This market was bullish, and then look at, there was no difference. It was still looking good, higher high, higher high, and then look at this. You may see the market changed direction. Look at, can you see the shift there? You may see it shifted. You can see this long sell down. So this is what a divergence tells you, that the market is going to likely sell. And this is a regular bearish divergence, a reversal pattern from a bullish setup to a bearish setup. So that is what this is used for. It is used to spot difference or a shift in the market structure, right? Let me see if I can find a bullish setup. a bullish setup, right? I want to see where there was a bullish setup, a regular bullish divergence, right? Now, if you look at this market, okay, look at this, look at this, look at this. Can you see this? The market was making something like lower lows and lower. This is a regular bullish divergence now, a reversal pattern. Look at what happened there. Just look at this. This is beautiful. Can you see it? A sharp what shift in the structure on the indicator as shown by the indicator. And look at what happened. The market became bullish ever since. So this was a warning that, hey sellers, this market is going to reverse and buy up. So after this, we saw this massive buy to the upside. I want someone to point out that the higher the time frame you find a divergence, the longer they buy or they sell, that is the longer they move. So if you find this on the daily, a divergence on the daily, man, is going to be very long. If you find it on the 15 minutes, it's going to be kind of shorter. Find it on 30 minutes, kind of shorter, and all of that. So that is how to trade, to spot divergences, right? I think in the next video, I will now talk about how to trade divergence. This is just the introduction to divergence, right? I'll make another video on how to trade divergence because I don't want to make this video too long. I want to just stop here at just how to spot them. In the next video, I'll talk about how to trade them, right? This is just be spotting divergences, or let's say introduction to divergences. But in the next video, it will be how to trade them. All right. I'm trying to look for a hidden setup, right? Look at this. Look at this. Look at this. This market was making series of what? A series of what? A series of lower, higher highs and higher lows. Look at what happened there. Look what happened there. Look at this. If you look at this spot, this is where it is. Okay. Look at this. Somewhere around there, we saw something like this. Can you see that there was a hidden bullish divergence here? Somewhere around there. Yeah, somewhere around there. Somewhere around there. Look at this. Look at this. Look at this. Can you see this? The market was trending upwards, but look at what the indicator did. Look at this sharp down. Why should it come down when the market is going up? Look at this. This market never came down at this point, but the indicator was pointing, coming below at this, coming down and giving us something like a lower low. So this was a bullish continuation pattern, and it's called a hidden bullish divergence. Hidden shows continuation, why regular shows what? Reversal. So this was a hidden bullish divergence. The market is going to continue what? Buying, right? So that is how to spot divergence. So just practice these steps and you will learn. So let's go back one more time. This is a picture of what it looks like, right? The regular bearish divergence. You see the market doing this, making series of higher highs on the market, and indicator doing this. It's telling the market is going to reverse and sell down. The regular bullish, you see the market making lows, but oscillator making this. The market is going to buy up. Just take a screenshot of this. Take a screenshot of this. You can recognize it or write it down or draw it somewhere, right? Hidden bullish, the market is making a high, and as we saw on that chart, we saw the market making a different thing, right? Why the hidden bearish, the market is doing this, and the market is making a sharp difference. So the market is going to continue selling. Hidden is for continuation, while regular is for reversals. So one last thing before we close for today. We have our mentorship program running, and we have students that are already understanding this concept, right? It doesn't matter if you're a new trader, you're a crypto trader, you're static indices, right? Our mentorship program will teach you from scratch how to trade Forex until how to become profitable in trading the financial market. So we'll brush you up on everything we have done so far, even on things I cannot mention on this video here, right? Our course is very cheap, right? It's going only for $60, a one-time fee of $60. You just send, just click on the link on the description, or you send an email to electronglobal@gmail.com. So I'll put all that in the description page so that you will have a better understanding of that. So that is it for now. In the next video, we'll talk about how to trade divergence. this is just the introduction on how to spot them and all of that. But in the next video, we'll talk about how to trade divergence properly, right? So that is it for now. Cheers and have a wonderful weekend. Bye.